With rise interest, shortage of supply, and more strict housing rules, this is really a turbulent time for real estate investors and business owners. Massive wealth will be shifted during this period of time. Here are a few investment tips I want to share with you that will help you come out as a winner. First, take on fixed rate debt. We've been kind of beating this concept for a while now. Massive equity is made during last couple of years due to market really rallied off the low interest rate. We will continue to see interest rate hikes rapidly as mentioned in other videos. Thus, taking advantage of fixed rate debt is a huge one to control the expenses and hedging against the inflation. Deals and businesses must make sense with fixed rate debt analysis in order for you to pursue. Second, build a cash reserve, making sure the money in your hand is plenty. If you're investing into businesses, you want to invest in businesses and real estate deals that has ample cash reserve. Even though cash is trash, it still serves its own purposes for short-term needs. In real estate, not able to pay your mortgage is going to lead to bankruptcy. In businesses that are high on equity returns but low on cash management, if you want to invest in that type of business, you want to make sure that they have ample cash reserves in hand to burn and sustain the initial runway. Third, increase your access to cash. While interest rate is hiking, but it is still relatively low rate historically. One might be considering taking out some line of credits that you don't have to pay interest on if you don't draw on it. It's just so that you have access to cash, not necessarily cash in the bank. This can be in the form of HELOCs based on your primary home, HELOCs on your investment homes, or business line of credit. So having access to these business line of credits is going to allow you to create another sorts of rainy day funds. Investing in experience. When you're investing in businesses, stocks, or real estate, you should be looking for operators that has ample of experiences. This may be you yourself. If you're not, then maybe it's a good time to not take upon that position, but instead investing in people who have experienced the last down cycle and have a successful story or great lesson learned from last cycle and came out okay. These people knows how to navigate these type of turbulence time, and investing into businesses and real estate deals that are run by experienced operator is going to hugely help. Fifth, investing in essential services and cost saving strategies. What I mean is investing housing sectors and businesses that are providing essential services such as utility company and housing that is need housing versus luxury housing. People always need somewhere to live. So basic apartments serving workforce housing is going to be much more in needs, and it's going to have much less price reduction than a property that is luxury build. Because when the time is hard, everybody is looking to save a buck. The want services will be eliminated and the need services is always needed. 6, holding back on some capital improvements and do some A/B testing. Capital improvements in a great time is going to create a lot of value, increasing the income. However, when the market is down, again, if people are only seeking need services, they may not pay that extra buck for the want services. Therefore, even if you put in the capital expenditures into certain properties, you're not going to see the same amount of return in a good market. So you want to get a debt or creating a cash reserve that allows you to execute these capital expenditure plans, but hold back that capital expenditure plans and slowly implement it to test it before you make the decision to go rampant on that. This allows you to preserve more funds, which we already talked about it. Cash flow, cash reserves, the king during this time. 7th, investing in vertical integration. What is vertical integration? It is where a company has more control over its staff and supply chain. For example, in apartment investment, it means operators owns their own property management company, their own construction company, and even some parts of material manufacturing. Vertical integration can be very cost effective. The overall control that vertical integration have throughout the whole operation eliminates the fact that the right-hand side is not talking to the left-hand side. That's cost saving as well. These are businesses typically that fare much better during a downturn cycle as they can effectively shifting and regrouping their labors and resources. If you like what we do, please like this video and help us by subscribing to our channel to receive our future videos.